Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, dubious speculation. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. If you'd like a t-shirt for dubious speculation, you can find a link to that in the description below as well. And I would say the only thing more dubious than the speculation we are doing is the fact that a t-shirt is a v-neck. So let's go ahead and jump in. Bitcoin is hopefully proving to the bears ultimately that the cycle is in fact not over. Okay, and you know, with this most recent move, it certainly is providing a more and more compelling case every single day. Now we still have a little bit of work to do. I do think Bitcoin will make it there. Now, something to consider when we talk about where could Bitcoin theoretically go, what's it going to do from here. If you're sort of planning these things out and you're trying to come up with a general strategy, one thing that you can look for is not the 20-week SMA, although I do think testing it would be quite healthy, but there is in fact a chance that we don't test it. My preference is that we test it because I think it would provide a lot of confidence to the market, but we might not get that. Let me show you something. If we go look at the bull market support band on the daily time frame, you can see that once we got really going here, we didn't test it for months. And then by the time we did test it, we were too far gone. I don't think we're too far gone right now. If we were to go back down, I feel like there's still a good chance we would hold it as support. But there's something you need to consider, okay? And this is the thing that can get you into trouble if you're planning on accumulating Bitcoin during, say, a theoretical second leg or something, and you always wait for the 20-week. Imagine we test the 20-week and you think, okay, we're just going to keep testing it every 2 or 3 months, like we did in 2017. One of the things you have to remember is that during this first leg, instead of testing the 20-week, what did we test? We talked about this at the time. We tested the 8-week, the 8-week moving average, okay? And I'm going to put that one on here now. And you can see it's that pink line. This is what we came down and tested time after time again. And the only reason we really talked about this one, because we had identified back in 2013 that was one we tended to hold as support throughout this parabolic move. And then once we broke it, we ended up also breaking the 20-week, okay? So once that was broken, we broke the 20-week moving average. We actually had a weekly close below it. And then you go to the present day or say this most recent leg up, and we said, okay, well, when we broke that 8-week moving average here, it did end up leading to us breaking the 20-week as well. Now, at this point where we currently are, I don't think that breaking the 8-week moving average is that detrimental. Which again, I mean, right now it's at 46K and it's climbing every single week. But imagine a scenario where we get on another path like this, okay, where we repeat what happened over here and we forego the test of the 20-week. And let's just put that on the board here, okay? Let's take a bar pattern from here and we're gonna put it on the board and then just do a little bit of dubious speculation, okay? So we'll put it here. So we're gonna take this all the way over to the bottom here. So imagine we repeat it, and there's some similarities here, but imagine that we don't test the 20-week. In that scenario, if that ends up happening, then the 8-week moving average might be a key area to quote unquote buy the dip in the event of a retracement. Because again, that is what ultimately held as support. Now you'd have to ultimately figure out if you're interested in buying these types of dips when we're getting close to maybe another local top. But it might provide some level of support in the event we do get a, say, 20 or 30% pullback at some point. And if we did just overlay this, just to get an idea of where it would put us, it would actually put us at around 182K by January. All right, if we were to repeat exactly what we did starting from this bottom here, or this, basically right before we took off, if we use that one over here, it would actually put us at 182K by January of 2022. Now, it's my speculation again that the market cycle peak for Bitcoin, in my opinion, in my even somewhat ignorant opinion, is probably between 1 to 200K. And it often begs the question of, well, is it possible that we could be outside that range? Yes, it's possible, right? We could go below 100K, we could be above 200K. It's just my best guess. Okay, it's nothing more than my best guess as to where ultimately the market cycle peak will be. We can look at a lot of different indicators to get an idea of where that could be. We of course have the risk metric, which is what I use personally. That's part of the premium list, again, into the cryptoverse.com. But there's other indicators we can use as well to get a general idea, right? To get a general idea. One of them are the regression bands. And these, in my opinion, are not something that you should take to the bank, okay? Now, everyone always wants something that they can just waltz down to the bank and cash it in. Again, with a regression fit, I don't think you can take it to the bank. I just don't. Not on a 3 data point fit. The green line, I feel like this is one I personally rely on a lot during a bear market to accumulate and say, all right, this makes sense. This is where, this is where the fair value, the lower bound is, the fair value fit to non-bubble data. This is where it is. This is where it makes sense to accumulate. Ignore the noise, ignore the moves to the upside and the downside. Just ignore it. Wait for the move to the upper regression band one day. So I rely on that one heavily. For the peak regression band, I think we also have to look at it and say, it's only fit to 3 data points, so I'm not taking it to the bank. But if you did take it to the bank, where would it put Bitcoin? Well, today it would put it at around 105 or closing in on 106,000. So back in May, I didn't think that 100K was possible in the short term. But there's a lot of other indicators today. Now that we've had some time to cool off and whatnot, we're no longer ahead of schedule when looking at the market cycle ROI as measured from the halving or as measured from the bottom. 100K is in the cards, and the upper logarithmic regression band shows that it's in the cards. I mean, again, the top of the logarithmic regression band goes to $106,000 almost now, and it is increasing every single day. Okay, it's increasing every single day. For instance, if we were to try to draw this out, which is going to be somewhat hard to do here because I'm just drawing a straight line on a line that ultimately curves. But by say January, or let's say by December, it's going to be probably closer to 120K if I had to guess, something like that. I mean, I have it on a different plot, but probably close to 120K or so by the end of the year. And continuing to move up beyond that as we get into the next year. And that would be where this regression band would put us. Again, is that something you want to take to the bank? Probably not, because we could easily overshoot it or we could undershoot it, okay? But that's where that one would have us be. If we look at our corridor that we've been following for a little bit, it actually held up pretty well. And I mean, honestly, I'm somewhat surprised how well it held up during our brief lull in the market here. We developed this indicator back over here, and it held up pretty well in sort of showing us where some of these bottoms could be here. And now, as it's moving back up, it might beg the question, well, what is the range? Well, the lower bound range, just for full information, is now at around 27K, but it should start to pull up soon. The upper bound is at around $104,000 to $105,000. But again, if we continue to sort of marching like this, then this is going to start to go back up. Okay, so keep that in mind as we look at these indicators. Another interesting indicator that I think is worth looking at is the extension from the 20-week. Okay, and I like this indicator. And what we can do is, let's be conservative, right? I like being conservative, even if you guys don't like it. We can see that we're generally in a downtrend in terms of the extension from the 20-week. But even within the constraints of a downtrend, we still have a long ways that we could theoretically go. Based on where the 20-week is today, to get to this upper trend line here, this upper macro downtrend line, we would probably have to go to around $80,000 to $90,000. I know this because I recently did it in a live stream, but around $80,000 to $90,000 today. But again, this is a function of the 20-week moving average, and the 20-week moving average is actually starting to slowly move up now. So if a few months pass and we're still not at a market cycle peak, then the extension from the 20-week is only going to mean that we can go higher and higher. Okay, so keep that in mind. One of the things we can note is that historically, if we get above, say, 100% extended from the 20-week, then we know that we're pretty close to, at the very least, a local top. Not necessarily a market cycle top, or at least probably close to a local top. Right now, in order for Bitcoin to get extended by 100% from the 20-week, we would need to be at around $84,000. So again, a lot of the indicators that would theoretically try to predict a market cycle peak, they all show that we have a lot of room to run. Now, that doesn't mean we're going to run that room right away. It doesn't mean that it's going to happen tomorrow, next week. But what it does mean is that in the event that we do have a second leg to the cycle, which I do think is very likely, in the event that we are able to take out the prior all-time highs, and we either have the 4-year cycle, which is a very popular theory, or if the cycles end up lengthening, which is what I'm thinking, then we should have a lot of room to move up, right? We should have a lot of room to move up. That doesn't mean we're gonna go straight up to the top. Like, it doesn't mean we're gonna do something like that and put in a market cycle peak within 4 or 5 weeks, but it does mean that time is on our side, right? It means that time is ultimately on our side. Some other ones that we can look at, some other indicators that we maybe can look at. Let's actually go look at the 20-day SMA and see where that is, because we do know that when we do get some pullbacks, bouncing off the 20-day is ideal, and that's currently at around 49,170. So if we pull back to 49K, maybe look for a bounce off the 20-day. The 50-day is coming in at around 44K. The 100-day is coming in at 39,520, and the 200-day is actually at 46,000. So I think the 200-day is probably one of the more interesting things to watch now. We are above that moving average, and a lot of times, when we're above the 200-day, things are looking pretty good. Okay, I mean, when we got above the 200-day back in April, we really didn't look back for a long time, and then we broke below it here, and then we had to grind down here in our summer lull. Now we're actually just above it. So that might be another interesting area to see if we can hold the line at. Note that the 200-day SMA is at 46K, which is actually fairly similar to the 8-week moving average, which is at 46K as well. So I'm not saying we're going to get a pullback now. I'm just saying that in the event of a pullback, whatever those values end up being at the time, whatever the 200-day is, whatever the 8-week SMA is, and the 20-week SMA is, those are probably going to be key areas to keep an eye out for a potential bounce. So when we talk about this sort of dubious speculation, here we are sitting in September, Bitcoin's trading at just over $50,000. Ideally speaking, I think that, that Bitcoin, the upside potential from here is probably around 2 to 4x or so for, say, the market cycle. I know a lot of people think we're going to shoot above that and go beyond that. And if we do, great, right? If we do, great. But I personally am tempering my expectations and more or less thinking that the cycle is probably going to top out at 1 to 200K. But it should be a fun journey to get there. And I imagine there will be shakeouts along the way. Now, some other types of dubious speculation that I would like to say are, I think that a lot of times Bitcoin can be narrative driven. Okay, and going back to last year, we had the pandemic, which is still ongoing, obviously, but we also had, MicroStrategy buying Bitcoin, we had Tesla buying Bitcoin, and these certainly helped fuel the rally, okay? And even though there was bad news back then, no one cared about it because we were in a bull market. Remember, in a bull market, no one cares about the bad news. In a bear market, no one cares about the good news. So what I'm looking for, because again, the market looks great right now, right? Bitcoin's continuing to trend up. But what I'm looking for as we go into the fall, as we go into autumn here, and continuing to make our way through, say, the winter and whatnot, I would be on the lookout for institutions announcing that they bought Bitcoin right now or back over here. Okay, generally in this area. Be on the lookout over the next, say, 3 to 4 months for institutions announcing that they bought Bitcoin, but not announcing that they're buying Bitcoin at that time. So like, imagine if they come out in, say, October or November and say, some company has been buying Bitcoin. My guess is that they're actually buying it now, or the several weeks or months before now in this summer lull, and maybe even continuing to buy through this move here. But that by the time we're out, say, like a couple months from now, whenever they maybe make those announcements, they're probably no longer buying. But I would say keep an eye out for that, because I do think that'll happen. And it's probably going to help fuel the rally, right? It's probably going to help us get to that, hopefully, the inevitable 100K milestone this market cycle, and hopefully above that, right? I do think we'll go above 100K. But I would speculate, even if it's dubious, I would speculate that there will probably be some institutions that'll come out and say they've been buying Bitcoin, but they'll only announce it probably after they've already accumulated whatever they're going to accumulate. So I would say that. I would also say that I would expect some shakeouts, right? I don't think we're going to go to 100K without having some heart-wrenching shakeouts along the way. Remember, even the move to 64K during that last leg, we had shakeouts, and they turned some stomachs. Remember them? This one here was about a 30% move. Like, it was a 30% drop. This one was about a 25 or 26% drop. Okay, we had multiple shakeouts, and you have to remember that they will likely occur again. And I don't know when they're going to occur, but keep your eye out for them. And probably when they happen, I imagine that a lot of bears are going to exclaim that we're going back to $10,000, but we've seen that before. If we were to get a 30% correction here, which would be, I'm not sure that that's going to happen. Like, I would say it's not highly likely that we go back to these levels imminently. So I'm not necessarily looking for a 30% correction here, but just so it's on your radar, it would have us going back down to the mid 30s. But imagine a 30% correction came at, I don't know, let's say it came at 64K. Okay, let's say it came at 64K. A 30% correction there would actually take us back to 45K. If we got a 30% correction at, say, 75K, that would be looking at back down to the current prices, so around 52K. And if we got, say, a 30% correction at 90K, that would bring us back down to around 63K or so. So actually the prior local top. These are things that you should be cognizant of in the event of a drop. Recognize that even 30 to 40% corrections are par for the course. We're almost certainly going to see them. And if they happen, I certainly would not be surprised. Imagine if we got a 30% correction from 100K, which I feel like a lot of people could imagine. 100K is a pretty substantial milestone that I'm sure a lot of people are going to want to take profits at. 30% correction from there would take us back down to 69K. Okay, if we get a 30% correction from 120K, let's say we get a 40% correction from 120K, that would take us back down to 75. So we have to be aware of the general idea that there will be corrections that will take place en route to whatever our future market cycle peak will be, but that you should probably take them in stride. Now, a lot of people are still speculating that this is a dead cat bounce, okay? And to not just completely blow that off, but to show you why they think so, it's because, we're looking at a bounce off the 50-week, back to the golden pocket, right? The Fibonacci retracement stuff. That's what they're more or less looking at. But I would say they are ignoring a lot of other factors in the market. The fact that 2013 was a double peak cycle, that we had a pi cycle top in the middle of 2013, we had another one at the end of 2013. There's a lot of evidence to suggest that we should have a lengthening cycle. There's a lot of evidence, I don't think as compelling, but there's a lot of people that would show that we should at least have a 4-year cycle, which would put us peaking in December. Right? There's a stock to flow model, which a lot of people misinterpret as predicting peak prices, but when we had him on the show, he clarified it doesn't predict the peak price, it predicts the average price. So if his more conservative model predicts an average price of $100,000, and we're not even at $100,000 yet, then we should theoretically go above $100,000. A lot of on-chain metrics look great, and I do think that 64K is not the market cycle peak, but I will point out there are a lot of people out there that do think it is the peak. And if we do end up breaking 64K, then I would speculate that these people would help fuel the rally, because at that point, maybe the bears would capitulate and say, all right, it's not the market cycle peak. We're going to keep moving up. Maybe they're going to want to reclaim some of the Bitcoin that they don't actually have. So Yeah, I mean that's more or less I think what we want to discuss here. You know, and I also think too that if you look at the daily time frame and we go look at say like the daily RSI, we actually broke out, right? We actually, I mean, if we look at this line here, we actually have broken out of it. Now, I don't know if we're going to stay up here or not, but just like we said back in late July, right? Just like we said back in late July, it's a point for the bulls, okay? And the last time we broke out of this one was at around 31K or so, and you can see that we just broke out again. So, I mean, a lot of metrics do look bullish. Yes, there are some indicators that would lean bearish, but I think if you're looking at the overall picture for Bitcoin, and as long as you have like a macro outlook here and you're not worried about what happens, say like next week or something, I would still argue that things look relatively good. And that, you know, we recognize, like I recognize why some people are bearish, but I think that type of analysis is a little bit too rigid and not accounting for, you know, other things that we can see in the market and other types of analysis that do project we should be able to make it further than 64K this market cycle. So at the end of the day, I will say this now, okay, and I said this back when we were at 10K as well. I think even at 5K. I'll say it again today, okay. There's going to be people in the future that tell you were lucky. They're going to say, man, you're lucky for buying Bitcoin below 100K. They're going to say you're lucky. And I'm here to tell you today that if you've been buying Bitcoin over the summer lull, which we said, remember, when the market is bearish, that's when you buy. You don't wait until the market goes super bullish. Like if you're the person that waits until today to buy Bitcoin for the first time, you know, you missed out on this. Okay, you missed out on this. Remember, bull markets make you money. Bear markets make you rich. And we said this is a 3 to 6 month bear market. It looks like it was on the lower end, about 3 months, okay? About 3 months. And so don't ever let anyone tell you were lucky, because you were not lucky. You either, you took a risk, a calculated risk, and hopefully it pays off, okay? Because guess what? I mean, if it doesn't pay off, they'll rub it in your face. So if it does work out, remember, don't let them tell you were lucky, because they weren't the ones buying Bitcoin over here. They'll probably be the ones whining that they didn't buy Bitcoin over here someday in the future when it's over 100K. They'll say, man, I wish I could have bought Bitcoin when it was at 30K. You say, well, you know, you got to put your money where your mouth is. And when we're actually in those bearish times, you have to DCA Bitcoin. It's easy to look back and say it. It's a lot different to actually do it. Okay, it's a lot different to actually do it. So if you guys like the content, remember to subscribe to the channel, give the video a thumbs up. Also check out the premium list. You can find that at intothecryptoverse.com. If you want to know how I'm navigating these markets, you'll get access to these trading view indicators, weekly reports and videos, the Telegram alerts channel, the risk dashboard, and more. Make sure you guys check that out. Thank you for tuning in. Definitely subscribe. Click the bell icon to turn on notifications. And I will see you next time. Bye.